By the time you're able to buy a home, chances are you'll have some kind of debt. It could be a student loan, a car loan, or even a credit card balance. You wouldn't be alone. TransUnion reports that the average Canadian has around $30,000 of non-mortgage debt. Debt isn't always a bad thing. After all, paying off debt helps you build a credit history, which lenders use to gauge your overall credit worthiness. No credit history, no credit score, maybe no mortgage. Still, could your current debt stop you from getting a mortgage? Well, that depends. You need to consider two factors: your credit score and your debt-to-income ratios. Your credit score reflects how well you manage credit, and it can range from 300 to 900. The higher your credit score, the better your credit rating. If your credit score is below 600, it may be tough for you to get approved. Lenders also look at how much debt you have compared to your income. It's how they check that you'll be able to make mortgage payments on top of other debts and housing expenses. There are two measures used for that. First, there's the gross debt service ratio, also known as GDS. To calculate GDS, add up the expenses of your future property and divide that total by your gross household income. Include your mortgage payments, heating costs, property taxes, and if you're buying a condo, 50% of your condo fees. According to the Canada Mortgage and Housing Corporation, your GDS can't be any greater than 39%, but your non-mortgage debt isn't captured in GDS. So lenders use the total debt service ratio, also known as TDS, to get a more complete picture. TDS is calculated the same way as GDS, except you add up all your other debt payments to your expenses, things like car and student loans. Then you divide the total by your gross household income. Your TDS can't be any higher than 44%. Otherwise, you likely won't be able to afford the home. Paying off debt lowers your debt-to-income ratios. That in turn should increase the amount you can borrow on a mortgage. If you can't afford the mortgage you want, you might want to start there.